What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method that we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. Hit that subscribe and notification buttons as well. That way you're alerted to when we release new videos. Hitting that like button, giving the thumbs up always helps the channel out a lot. So we do appreciate those who continue to tune in and give us those thumbs up and subscribe to the channel. So we do appreciate that. Now, the nightly and weekend videos like tonight's video focus mostly on identifying triggers and targets for trades ranging from, scalps and intraday trades to long-term swings or leap trades as well. So if you want a deeper dive into exactly how the charts are set up or how we set up our charts, make sure you check out the bonus content on our YouTube page. We go over broadening formations, levels of support and resistance, things of that nature. We've got a couple of videos that dive deeper into that for you. And if you're not familiar with the STRAT, which is the base of our charting and trading method, make sure you check out the description of this video. There's a link to a free PDF quick reference guide. That'll give you everything you need to know to understand the STRAT, right? Very simple way to read the charts. So yeah, I do encourage you to watch the full video. We do go over some triggers and targets on the smaller time frames, but we do analyze all time frames all the way up through the 1 year chart and give some pretty good insight. So go ahead and stay with us through the full video, and I'm sure you'll be glad. But with that, let's go ahead and take a look at the agenda for today. We'll go ahead and recap the price action from Thursday, February 12th. Before we zoom out like we always do and look at the week, month, quarter, and year. Then we will look at the market maker's expected move for Friday, February 13th before zooming back in to set the 4-hour markers and the triggers and targets for Friday, February 13th. And then we'll also do a quick review of the triggers and targets for the week, month, quarter, and year as well. All right. So let's just go to the charts here, starting off on the 5-minute like we always do. This is the way we take advantage of our proven and repeatable strategy. And that is by taking or getting into calls whenever we see higher lows at or above the opening print or the opening trading price for the day, or we get into puts when we see lower highs at or below the opening print. All right. So first things first, with today's open, right? Opened up, slight gap up, but the open right here in this peach dashed line, price level 1, 69.67. It was right, basically right at market maker's expected move high. Overnight high was right there as well. The 200 fib extension of the April 7th bull flag. And then, I'm sorry, not the April 7th bull flag, but the higher range that we've been trading in recently, as opposed to the one that we traded in at the end of the year. That 200 fib extension is right there, as well as a 15-minute broadening formation and a 4-hour broadening formation. So the past couple of days, we've been looking at the 1 minute, actually, the first couple of minutes of the day to get into those scalps early on, because we've been seeing a quick movement within that first 5 minutes, basically 10 minutes. But again, today, because of where we were opening, we had a little bit more, pause or hesitation as far as going off of the 1 minute. Knew that there would probably be some, basically noise on the 1 minute. And, that's what we got, right? We're not the only ones that put broadening formations on our chart or have these levels of support resistance, previous high day, things like that. We're not the only ones that put them on the chart. So, most people would probably be, we guess that most people would probably be, waiting for maybe the larger money to make the moves or whatever for the larger move to play out instead of playing that 1 minute. So we went back to playing the 5 minute like we normally do, and we're kind of glad that we did, right? So we did actually lose on the first trade of the day. You can see here we opened, we pushed up, we came back down just slightly below opening print, but we closed the gap. That was the main thing. And what we were looking at is a possible gap close or gap fill reversal, which is what looked like was going to happen, right? We got the higher low here. If we bring in yesterday's price action, there is the low from Wednesday, and then here is the first low of today's price action. So it was a higher low there, or once this candle went 2 up, essentially it was a higher low, and we went ahead and entered some calls, right? Again, because of where we're positioned as far as price and the levels that we're at, we didn't enter very heavy. And it ended up being a good thing, right? So number one, the higher low was just slightly below opening print. So we already knew we were taking on a little bit more risk anyways. But we got the 2 up, locked in the higher low. Next candle was an inside candle, but it was green and pretty solid candle. No wick on the top side, only wick on the bottom side. But then it was followed up by this real weak 2 up. As opposed to the 1, it was a 2 up, but it didn't go past the high of the 2 up that actually locked in the higher low. So, once we went, it wasn't on this 2 down because this 2 down didn't quite break the low. But once we got into this 3 and we broke below, actually it might have been this 2. Once we broke below the low of this 2 up that locked in the higher low, we went ahead and exited there for just a small loss. Again, entry was here at essentially opening print, so we'll just call it 69.70, and our exit was here around 68.72. So not a lot of loss there. But the whole time we're watching this, I don't want to call it weakness, but just sideways price action right up against this broadening formation underneath, the 15-minute and the 4-hour broadening formation underneath the opening print, just sitting right on previous high day. We started, in these candles here, we started looking at the market internals, or for the internals for the QQQ at least. And let's go to those. If we bring that out, should be good. So if we look at the market internals, the tick did open up in trend higher zone, which is expected, right? We had a slight gap up, so that makes sense. But you can see it dropped to that 0 line pretty quick. It did bounce off of it, but then failed the trend higher zone again. Ended up dropping down below the 0 line. Vol QD, money going in versus money coming out, was at 0 line and just fairly slowly fading in the morning, and then dipped below. And every time it tried to get back up to it, it was being rejected. Market breadth, ADQD, again opened up basically in trend higher zone because the Qs opened up in a slight gap up, but immediately it started to fade and it got to the 0 line, and then once it was below it, tested it a couple times and couldn't get above it. So from very early on in the morning, right, this is already by like 9:15, we could see, all right, we're down below 0 line at that point. So even before 9 o'clock, you were getting the signal from the internals that things were looking like at the very least a slight pullback. But we did get that bigger drawdown. So while we set our stop here, we did go ahead and enter some puts when we got this essentially lower high right here. Right, this was a higher low on the 5-minute as opposed to this low. So we went higher low, higher high, higher low. So it looked like the trend might still stay up, but we were still eyeing the puts. We were staying in the calls because that was still, we hadn't made the lower low. But once we made this lower high, this candle turned into a 3 bearish engulfing candle, essentially a 1-3 bear strat reversal. If you're familiar with the strat, that would make sense there as well, or you recognize that there. And that kind of triggered that landslide down. So we went ahead and entered puts on this 2 down, kind of light. Still wanted to see how the morning was going to play out. Were we going to just do this look below and fail on the previous high a day like we did earlier? Right? Were we going to bounce off of overnight low as support and then go back to the upside? Weren't quite sure. So entered kind of light. But then once we got this soft lower high right here, added to the position, dropped down pretty rapidly, got rid of half of our position at previous low a day, waited for a higher low high. Was it this one? I thought there was a higher low. Maybe we just got out on the broadening formation. I know there was a higher high here while we were moving sideways that we got out of about 25% of the initial total position, which was 50% of the remaining position at that time. And we did leave some runners, which did benefit us holding out, because this in the end just started looking up like a bear flag on like the 5-minute, 15-minute chart. Let's just make this a little better, right? Here's the flag pull. There's the flag, right? So we stayed in that last 25% of the position, dropped back down to previous low a day. Actually, because it was the end of the day, actually sold another, basically the rest of the position, and left one runner. So we did leave one runner, and at the end of the day, it was still looking good because we got this lower high, went down, didn't quite make a lower low yet, but basically time, the market closed at that point, so time kind of got us. But there are AMAT there was AMAT earnings after hours today. We've got CPI tomorrow morning, so that's why we only swung one put. Didn't want to put too much at risk in case, AMAT had great earnings and guidance, and it looks like right now, yeah, they were up like 9 or 10% earlier. It's got SOXL up 3.3% right now and afters. Now we're only about an hour after the market's closed, but as of right now, chips look to be up. Everybody pretty much green. MU, what was the news this morning? Micron did, I think they now announced like a new technology that they're implementing, and they were actually green. All the rest of the chips were red today, but MU finished green on the day. So there is still a little bit of relative strength within chips. But we'll see what tomorrow's CPI print has to say about it. I don't know what the guidance was. I haven't listened to the earnings call or anything for AMAT, so we'll see if maybe guidance has AMAT pull back a little bit from that bounce that it had. Basically, just got to wait and see what's going to happen, right? So let's go ahead and zoom out a little bit more. We were talking about the 1 hour, keeping an eye on the 1 hour in our previous videos, and just kind of more frustration with the 1 hour at this point, really, because we went up, made this higher high, had this big drop this morning, sideways action, and still technically have not made a lower low, right? The lower low is right here at 62.62. Let's see, this candle got to 63 flat, and this candle got to 62.77. So we still have yet to make a lower low. And if things stay as they are right now into open tomorrow, when we open up, we're up 3.3% from where we closed. That's going to give us another 2 up, right? So, and prevent us from making a lower low at this point in the hour, right? So is it just going to be sideways action? We do have this, say tomorrow morning, that first 1 hour candle goes 2 up, right? Even if we do make some type of higher high here and then pull back even more, it's just giving us a broadening formation, right? So we don't have any trend on the 1 hour at this point in time. You can say that we're in a downtrend because we made this lower low here in comparison to this low. But in comparison to this kind of range that we're talking about, we're still within it and actually just slightly above it. So I'm kind of considering that still haven't made a lower low on the 1 hour yet. But again, we got to see how things play out, in those early hours tomorrow, when we get the CPI before opening, and then the opening of the day. Because just look at today, we opened up with a slight gap up and then big pullback, right? Yesterday morning, opened up with a gap up, big pullback. Now, yesterday ended up bouncing, didn't bounce today, but we'll see what, got to continue to have patience at this point. Just play the volatility on everything, the 1 day chart and below, right? Recognize the ranges and play those edges, right? That's the key here. If we look at the 4 hour chart, right, it just left us with the big 3-2 down. Possibility of a 3-2 down, 2 up reversal in that first 4 hour candle of tomorrow, or we can just continue this kind of domino effect of knocking out this kind of thin level, thin structure that we've got over here of just these straight green candles up, pulling back into the week flip, the month flip, and we'll talk about the market makers expected move low, but also kind of retesting last month and this month's 50% level. Right, haven't talked about this week's 50% level as much as we do most weeks because we haven't really tested it. Kind of just shot through it and kept going, which just goes further to my point of what happens at that 50% level. Usually is a good indicator for the rest of the week, right? You can see we blew straight through it, and for the rest of the week we've been above it. If we would have got up to it, moved sideways, then we would have had a more, again, 50-50 chance for the rest of the week. Would we go higher or lower? If we went up and just straight rejected, then we probably would have been lower for the rest of this week. But the first initial test of it was shot straight through, and we've been above it since then. So clearly plenty of room to pull back and make a higher low. Again, remember, we talked about this in the past videos. I consider these soft higher lows here. They weren't just straight true 2 down candles, right? So we'll see. In my opinion, we've still got a long ways we can pull back before making a lower low. We're just in this sideways action, right? And on the day chart, Let's get a little cleaner chart here. There we go. On the day chart, right? Just left with a bearish engulfing candle today. Now it's following a 2-up hammer, so it's not like a 1-3 Reb Strat reversal where we're just expecting, a drop tomorrow. This is just kind of, a candle of indecision, but on a large scale, right? Instead of being an inside candle and small amount of indecision, the bulls tried, the bears tried. Neither one worked out really. Looks like the bulls had won the day, but again, looking in after hours, we're now up 3.5% for SOXL off those AMAT earnings. So just expanding the smaller time frame range as indicated by this 3 on the day chart, right? And on everything under the day is basically in a broadening formation within this 3. But we have made this, soft higher high here to kind of continue this broadening formation that we're in. And which one are we in, right? If we look at these, if you take lows to lows, right, we've got to figure out which one of these broadening formations we're in, right? Highs to highs. Are we in one of these bigger ones, right? Oops, and here's actually another one right here, right? So the widest one with the steepest angle to the top and the lowest line on the bottom, but less steep. Are we in that broadening formation, or are we in this next one that was created with a little steeper line on the downside and a little less steep on the upside? Are we on this final one that we've just made, where the upper line is flattened out even more, and the bottom part of the broadening formation has gotten even steeper, right? That would tend to signal, right, that it's rolling over, right? Instead of continuing to go up, these broadening formations keep flattening out, and at what point does it turn into a downtrend line again, right? So we just want to keep that in mind. I'm not saying that we're going to drop back to the bottom of the range. I mean, heck, we kind of did today just in one day. If we're looking at like, let's pull up a block. If we're looking at like this right here as being the range, something like that, right? It's not exact, but if that's the range that we've been in for the past few weeks, other than the quick dip down and pop back up into the range, we kind of made that move from the top to the bottom almost already in one day. So especially with the day being a 3, tomorrow could just be like a 2 down, failed 2 down, or not even have to be a failed 2 down, but 2 down to get to the bottom of the range, and then that could just be set up for a 3, 2 down, 2 up on Monday, right? Just to go back to the top of the range. So right now, again, on the 1-day chart and below, just play this volatility, play the range, the established range that we know about. And, if you don't want to play in the middle because it's a little bit tougher, that's fine. Just wait till we get to those edges and then either buy puts at the top or wait till we get some type of higher low above that edge to get into calls, or when we get to the bottom, wait for that bounce to get into calls, or, wait for a lower high below that to get into puts, right? Or you're selling calls at the top, either, whatever works best for you. Just keep all that in mind, right? So let's remove these, kind of clean this chart up. But hopefully everybody can see those broadening formations that have been established on the 1-day chart, and how they do start to point to price, flattening out, if not going back to the downside, right? Zoom out a little bit more and take a look at the week. Again, we went 2 up on this week, locking in last week as a higher low. Have not made a higher high on the week though, right? So if we don't finish out the week going higher, then we have to count on next week to continue that, or we're looking at being just in this range again, moving sideways, right? One thing we would have to look out for as well, if we go 2 down next week, right, this would be a lower high technically, and we would have to watch out for a lower low, because if we made a lower low, now we're starting a downtrend. Now the trend is reversing, and now we've got to look at, okay, now looking at longer swings on puts and just getting our targets ready for the downside. Because if you remember back to like 2022, right, that was following a great 2020 and 2021. And 2022, it was really after a lower high on the week is when things really dropped out. Let's go, let me just zoom out a little bit here and I can kind of show that. So if we go and compare, there we go. So here's 2020 to 2021 run up, right? Looks very similar to what we just did, right? Kind of ran up, kind of plateaued, maybe a little flag, then popped again, and a lot bigger flag before kind of a blow off top, bring you back down, and it was well, this first big draft was big, but then we had this lower high here on the week, and that really sent us down to the bottom, right? So that's what we want to look out for here. We don't want a repeat of, this big run up, flag, blow off top, right? That's what we've got here. Big run up, flag, blow off top. Now, do we get this lower high in the week to really send us down, right? That's what we want to look out for. But again, we don't want to get ahead of ourselves because that has not happened yet. Number one, we haven't made a 2 down on the week. We need another week before we can even see if we're going to get a 2 down to lock this in as a lower high. And even if we do get the 2 down to lock this in as a lower high, what happens? Do we get a higher low and just consolidate, bullish consolidation, or do we get that lower low, right? That's the key. Now we've got the gap here at 55. We've got a gap here at 49. We've got a gap here at 44. So, it looks like we could be going back to the downside, right? These do act as magnets for price action, but we just gotta be patient, right? We're hitting this monthly broadening formation here, kind of flattening out. We talked about the daily broadening formations kind of rolling over. So the next thing to keep an eye out on is the week, all right? And then the month, we're just stuck again. We're a 1 inside candle. Now we're in the upper half. We're still closing in the upper half of the previous month's candle, but there's still that threat of a 1, 2 up, 2 down on the board, and that would bring us all the way back down here to the $28 level. So just keep an eye definitely on the week first. But in case we just get the kind of like a rug pull before we get a lower high on the week. If we were to get a 2 down on the month before we were to get a lower high in the week, that would be your trigger to enter into further downside with a little bit more weight, right? So that's it from the month. The quarter, again, not a lot to say here. We were in the 1 combo 2 down, combo 2 up, strat reversal, reached magnitude at 70.08, and we're seeing that pullback, that digestion of that move, people taking profits, things of that nature. So not a lot to look for on the quarter. If we do go 2 down on the quarter, not that big of a deal because it's not triggering a huge strat reversal in terms of going back down here to the 10, 15, 10, $7 level. But if we do go 2 down on the quarter, next quarter, that does trigger this 2 up, 2 up, 2 down, which would bring us back down to that $28 level as well. So just keep an eye on that, but nothing really negative to say about the quarter, and the same with the year, right? Make this a little smaller. There we go. So we had the 2 down last year, went 2 up this year, triggering the 2 down, 2 up reversal, and it's already reached magnitude. So only things left to look for on the quarter and the year really are, all-time high at 74.21 and then blue sky territory. So that's what we got from a zoomed in and a zoomed out view. Let's come into, let's go the 1 hour. Will that give it to us without too much? Yeah, there we go. So the next thing to talk about is the market maker's expected move high for the day, for Friday, right? We knew for the week market maker's expected move high was 70.22, and you can see as of right now that's where price rejected. Yeah, we got a little wick above, but no close above, no body above, and since then you can see where price has gone. So that was definitely a strong point, inflection point. Doesn't mean that we can't just go right back to it tomorrow and even bust through it, but about 70% of the time market makers are correct. So that's why we can see it at the very least we didn't go sideways, but we had the pullback. Now for the day, for Friday, the market makers expected move, let's go to there we go. Let's bring this up here. If we go to the options chain for this week, for Friday, this week, it's expiring tomorrow, Friday, February 13th. We go over here to the right. This is Thinkorswim. We can see there's a plus or minus 4.939 in parentheses here. What that is, the market maker's expected move. They expect plus or minus $4, and we'll call it 94-cent move from the close price of Thursday at 63.10. right? So if we go back to our notes here, these are our notes for Friday, February 13th, 222 trading days left in the year, and starting on Friday. And then the close price on Thursday was 63.10. We know that to flip the week red, we have to get below 59.99. Flip the month red, we have to get below 59.51. And then for the quarter and the year, 45.13 is the number that we have to go through to turn those red. But for right now, everything is green, full time frame continuity to the upside. Right, we talked about the market maker's expected move for the week was plus or minus $8.47 from close price on Friday, giving us that expected range of 70.22 to 53.28. And then we have the market maker's expected move for this Friday at $4 and plus or minus $4.94, giving us an expected range of 68.04 to 58.16. Right. Still no gaps above, but we do know where the gaps are below. Always keep those in our notes. They do act as magnets, so we want to know where most of our magnets are, or all of our magnets are really. And then we talked about from a scalping perspective, you want to look for higher lows at or above opening print to get into calls, or lower highs at or below opening print to get into puts. All right, but that's where we've got our market maker's expected move. There's the expected range. If we go back to the chart, you can see in orange, right? If you're not familiar with the channel, purple lines, whether dashed or solid, purple indicates week indicators for the week, and orange are indicators for the day. So we can see the market maker's expected move high for Friday is 68.04 here. That would not give us a 2 up on the day. That would be an inside day if we didn't go 2 down to begin with. But the market maker's expected move low would imply a 2 down on the day, down here at 58.16. That brings us back down here a little bit past the week and month flip and retesting last month and last week's 50% level. All right. So that's where the market maker's expected move plays out for the day. And let's switch to the 4 hour so we can start talking about these day trades, maybe overnight swings. Now we do have a weekend coming up, so maybe the 4 hour isn't the best to go off of, but it can be helpful even for overnight swings. Looking at the 4 hour chart, like we talked about, we do have a 3-2 down from Thursday's price action. So that does technically set up a possibility of a 3-2 down, 2 up. Now that's another one of my favorite STRAT reversals. Gives you great magnitude. But we do have to remember that we're not necessarily in an uptrend anymore. I mean, from a 1 hour and below perspective, right? There was a lot of damage done with the first 4 hour candle. Now the 4 hour, technically it's still in an uptrend. So from a 4 hour perspective, if that 3-2 down, 2 up were to trigger, I would probably expect it to reach magnitude, if not at least back to market maker's expected move high or something like that. That coincides with this 4 hour broadening formation. But because of no real trend being set, especially not to the upside on the the 1 hour 15 minute, you've got to kind of watch to see we may not make it all the way. And that's where you look at like last week's high, which coincides with the 138.2 fib extension of last year's price action, which also coincides with the market maker's expected move high. That may be where price either flattens out or even just rejects, right? Maybe that's where we get a lower high on the 4 hour to start the 4 hour trend back to the downside, since the 1 hour and the 15 minute are already pretty much pointing that direction, right? That is a possibility for tomorrow, but the magnitude of that move would bring us back up to market maker's expected move high and just slightly above there, possibly getting up there and retesting last month's high. All right. Now to the downside, we would have this 2 down continuation, but technically it would be a messy 1 combo 2 up, combo 2 down. Magnitude of that being the low of this 3 here, the low of the candle to the left of the 1. So what's that? 61.42 from 63 flat. Decent amount of price action there, but that would then trigger this even larger domino effect type of move to the low of this 3 as well. That coincides with week flip, the month flip, and just above last week's 50% level and last month's 50% level. So if we do get price action to the downside, I would definitely expect it to get down here around this 59, 58 level. But once we get there, not sure how much further it would go, unless just CPI is really bad and AMAT gives like horrible, if they still haven't had their call on, what time is it? Yeah, I'm still kind of early in the afternoon. If they still haven't had their call and giving guidance, if we get some catalyst to the downside, then maybe we break that below that. But with just natural price action, I don't know that we would break below that. right? So either 3, 2 down, 2 up, or this 2 down continuation into these kind of, messier strat reversals can apply, right? And on the 1 day, look at things here. Let's go. There we go. On the 1 day, again, a bearish engulfing candle. Now it's following it too, so it's not a 1-3 strat reversal. So don't expect it to go to the downside. But what that does is set up kind of like a dummy day for Friday, right? If we go 2 down tomorrow, especially if we go with a failed 2 down, then that could be setting up a 3, 2 down, 2 up on Monday. If we go, up, if we go 2 up on Friday, could be a dummy day that sets us up for a 3, 2 up, 2 down. So we just want to, not get too far over our skis, maybe not swing too heavy into the weekend, especially if you're swinging contracts that expire like February 20th, next Friday. May not be the smartest choice for you, but again, do what works best for you, right? We're just here to offer a little bit of advice and maybe another view, another perspective, right? We'll have our triggers and targets ready on both sides of the equation. We don't like to guess which way things are going to go. We just wait for something to trigger and then follow it, right? But that's how we're looking at it from the day perspective. Tomorrow could just be a dummy day, or Friday, depending on when you're watching this. Friday could be a dummy day. So just watch that. Let's go to the notes, back to the notes here. We've been looking at the charts a lot, right? So from the 4-hour perspective, we talked about if we get a 2 down, that triggers at 62.77. We've got these extended targets listed out here for you. And if we go to the upside, it does trigger this 3, 2 down, 2 up reversal, triggering at 65.14, ultimate magnitude 70.86. But watch these levels in between as possible levels where we either reject or move sideways, right? If we're going to make a lower high on the 4-hour, one of these levels is probably where it would be. From the day perspective, we talked about Friday could just be a dummy day. If we go 2 down, it just sets up this 3, 2 down, possible 2 up on Monday, but it would trigger at 62.77. We've got the extended targets listed out here for you. And then if we were to trigger to the upside at 2 up, it would take getting up to at least 70.86. And we've got our extended targets listed out here for you as well. But remember, just keep watch on how the day closes, which will be kind of key for us because normally we walk away from the desk around 11 noon on on Fridays, just to start our weekend early, and so we may need to just keep the corner of our eye on the markets as we go through the week, through the afternoon, just to see how things close, right? But that's what we have from the 4-hour and the day. Looking at the week, again, we went 2 up, locking in last week as a higher low, went above 67.62. We're back below that, so we're going to go ahead and unbold this. Remember, the underline means we've triggered it. The bold means it's in force. In force means we're either above the trigger if it's a trigger to the upside, or we're still below the trigger if it's to the downside. But yeah, we've got the 2 down, 2 up that triggered. Didn't quite reach magnitude, but if we are going to continue it to the upside tomorrow, that would be the magnitude for the move on the week, right? If we do reach that and continue higher, those are your extended targets. We talked about on the month, we're still an inside month. Got to get all the way down to 45.08 to trigger that 1, 2 up, 2 down on the month. So still a ways to go. We'll talk about it a little bit more as we approach that level, if we approach that level. Otherwise, we're looking for the 2 up to trigger at 71.98, which is the magnitude for the week's move, and continue to move on into, obviously, the 74.21 is all-time high, and then blue sky territories, right? And on the quarter, we talked about we ran the 1 combo 2 down, combo 2 up strat to completion, and just waiting, got to wait patiently on these higher time frames at this point. Just looking for all-time high and blue sky territories. Same with the year, right? We ran the strat, the 2 down, 2 up, reached magnitude, and we just got to be patient at this point, right? So there you have it. Those are your chart breakdowns and the triggers and targets for everything from a scalping perspective all the way up to the 1-year chart. I hope you enjoyed today's video. We try to jam in as much information as possible without taking up too much of your time. So if it's not too much to ask, please give us a thumbs up. It really helps the channel grow. And that's what we just want to do. We just want to grow, help people maybe trade just a little bit better, right? We're not saying that our method is the best method or the only method to use. Heck, we don't even charge a fee for the videos or a membership or anything like that. We're just trying to provide as the best information we can to help people out a little bit out there. So thumbs up goes a long way, and if you think this video would help somebody, go ahead and give it a share as well. But we'll go ahead and end the video at this point. We'll end it like we always do. If you're watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you were watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed. And we look forward to getting out there and trading with you.